Hi everyone, my name is Anisha Dr. Virasamy. So I'm going to present about introduction of Labuan Foundation Act 2010. So the background, the Labuan Foundation Act 2010 was enacted by the Malaysian government to create a clear and modern legal framework for setting up and managing foundation in Labuan. Labuan is a part of Malaysia but operates in an international business finance center, also known as IBFC, with its own set of business friendly law and tax structures. So, the purpose of the Act before 2010, Labunan mainly offered trust and companies legal structure. The foundation structure was introduced to give investors, families, and Filipinos more flexible. The act to ensure the foundations are legally recognized so they can enter contracts and own property in their own name. Property management with the rules of governments and record keeping and accountability used for lawful objectives such as wealth management, succession planning, asset protections, or charitable activities. So, what are the importance in the wealth management? So, the act is signifying because it gives an individual family in Asia and worldwide access to the legal structure that was previously more common in Europe, like Panama as well. So, who can use it? By the way, who can use this Labunan Foundation Act in 2010? So it's a high net worth individual, also known as HNWI, for the succession planning, families to preserve wealth across the generations, and corporations to hold the asset investment or for the charitable projects. Then next will be what is foundation. So in a separate legal entity, foundation its own legal personal. It can own asset, enter into agreements, sued, or can be sued its own name. So this makes a difference from trust where assets are legally owned by trustees, not the trust itself. And then hybrid nature between trust and a company. Like a trust has a beneficial who receive benefits from asset can last for generations. When it comes for like a company has a legal personality can act its own just through the manners. So when it comes for the no shareholder, a company has shareholders who own assets. A foundation has no owners. Once assets are donated, they are belong to the foundation itself. This ensures the independency and asset protection because no one can claim ownership.
Key features of a Labuan Foundation. Now, I will explain some of the key features of a Labuan Foundation according to the Labuan Foundation Act 2010. First, founder. The founder is the individual or entity who established the foundation and contributes initial assets. The founder acts as the founder who creates the foundation for a specific purpose. Second, charter. The charter is an important document that serves as the constitution of the foundation. It contains the objective of the foundation, who the beneficiaries are, as well as the management and administration rules of the foundation. Third, council. The council is similar to the board of directors in a company. They are responsible for managing and operating all the daily affairs of the foundation, ensuring that it runs according to the goals and rules set out in the charter. Fourth, officer. To ensure local compliance, at least one officer must be a registered Labuan Trust Company. The role of this officer is important to ensure that the foundation complies with local laws. Fifth, beneficiaries. Beneficiaries are individuals or parties who will receive benefit from the foundation, either directly or indirectly. Finally, the protector or supervisor. This is an optional role that can be appointed to monitor and regulate the council. The protector or supervisor ensure that the council acts properly in accordance with the aims and provisions of the charter. Next, I will explain the main purpose of establish a Labuan Foundation. First, a Labuan Foundation can be established for personal purpose. For example, it is often used in family wealth management and estate planning. It helps ensure that assets can be preserved and inherited according to the founder's wish. Second, a foundation can also be established for charitable purpose. These include providing scholarship, community project, or donation to charitable organization. In this way, a Labuan Foundation helps support social initiatives that benefit the community. In addition, a foundation is often used For asset protection, it can protect assets from any dispute or claims by creditors, thus ensuring that the founder wealth is more secure and preserved. Finally, a Labuan foundation is also commonly used as an asset holding structure. It can manage investment, real estate, or business assets in a more organized and planned manner. In conclusion, a Labuan foundation is very flexible in terms of the purpose of establishment and can be adapted according to the founder's need.
Next, I want to present about the advantage of Labuan Foundation. Labuan Foundation offer a wide range of advantage, especially for individual and business who want to protect and manage their wealth effectively. The first advantage is asset protection. Once assets are transferred into the foundation, they are no longer legally owned by the founder. This makes it very difficult for creditor or lawsuit to claim those assets, which provides strong financial security. Second is flexibility. A Labuan Foundation can be established for many purposes, such as family wealth management, estate planning, business succession, or even for charitable activity. This flexibility makes it suitable for both individuals and corporations. The third advantage is confidentiality. Unlike some jurisdictions where the name of beneficiaries are publicly available, Labuan ensure that beneficiary details remain private. This is very important for those who want to keep family or business arrangement discreet. Another important benefit is perpetual existence. A foundation will continue to operate regardless of the founder's death or incapacity. This ensures smooth succession and avoid complications that may arise in the distribution of wealth. Labuan also offers tax efficiency. Depending on the activity, a foundation may either pay a low tax rate of 3% on audited net profits or choose to pay a fixed annual tax of 20,000 ringgit. For non-trading activity, they can even be full tax exemption. This makes Labuan one of the most attractive jurisdictions for wealth management. In addition, Labuan Foundation supports succession planning, allowing wealth to be transferred easily across generations without lengthy inheritance procedure. They are also cost efficient because the registration and maintenance costs in Labuan are relatively lower compared to other offshore centres. Lastly, Labuan Foundation enjoy international recognition. Since Labuan is an international business and financial center, its foundation structure is widely respected and expected in global financial market. Now, let's move on to the regulatory and legal framework of Labuan Foundation. Labuan Foundation are regulated by the Labuan Financial Service Authority, or LFSA. This authority is responsible for monitoring, supervising, and ensuring that all foundations comply with the law. The legal framework governing foundation is the Labuan Foundation Act 2010. Under this act, a foundation must be properly registered with LFSA in order to be valid. There are several key requirements. Every foundation must maintain a registered office in Labuan. It must also appoint at least one office, and this role can be only be fulfilled by a licensed Labuan Trust Company, which acts as the professional administrator. Another requirement is record keeping and annual reporting. Even if an audit is not mandatory, the foundation must keep accurate accounts and submit annual returns to LFSA to show transparency. The governance structure of a Labuan Foundation is also clearly defined. The founder set out the objective and rules in the chart. Then, council members are appointed to manage the foundation's daily operation. In some case, a supervisory person may be appointed to oversee and ensure that the council is acting in the best interest of the foundation. Finally, Labuan Foundation must comply with anti-money laundering and counter-terrorism financing laws, as well as international standards. This ensures that the foundation is not misused for illegal activity and maintains Labuan's reputation as a trusted financial center.
Now, I will explain about the dissolution of a foundation. A foundation can be dissolved in several situations. First, when the objectives of the foundation have already been achieved or when those objectives can no longer be achieved. Second, if the duration or time limit stated in the charter has expired. And third, the council or the founder may also decide to dissolve the foundation if they feel it's not longer needed. After dissolution, the remaining assets will not disappear. Instead, they must be distributed according to what is right in the charter or based on the rights of the beneficiaries. So, in short, dissolution is the formal process of closing down a foundation once its purpose or time frame has ended.
Challenges and consideration. Founder must ensure proper compliance with LFSA regulation or the foundation may face penalties. Awareness of foundation is still low compared to companies and trusts, especially in Asia. Cross-border recognition can be a challenge as different countries have different legal systems. Conclusion: the Labuan Foundation Act 2010 is a powerful tool for asset protection, succession planning, and philanthropy. It combines the flexibility of trust with the legal recognition of companies, making it suitable for individual, family, and business looking for long-term wealth structuring.